All right. Well, welcome back, everybody, to the Bookmap Academy meeting. We do this every Thursday at market close, and the goal here of the academy is it's a coaching and mentoring program. Bookmap users who are looking for that kind of feedback, we offer it. We have a whole plan that you go through. I can demo this for you. Hold on just a minute and show it here. It's at bookmap.com/academy. Doesn't show up. Okay, hold on. Okay, there it is. So just go to bookmap.com/academy, and you can apply here for the program. And you can join the meetings and partake in the academy over on our Discord server. And you can also get feedback from the community. If you want coaches' feedback, then it's a little different. You're going to have to fill out a spreadsheet, and then and I'll go through this process for you and show you how it's done. Then all you do is create your content, markup and journal your charts, fill out your spreadsheet. We're just looking for one a day. That's it. Just one journaling a day. And if you meet the quota of the quantitative threshold and the quantitative of just one per day, you can get Bookmap for free. So there's a step process in here. Step one is to join, and then you'll apply, and then you go through the Bookmap Junior Academy, Bookmap Academy, become a coach, become a streamer. So that's the process. And I want to show you, though, more than that, and what the Academy criteria is. So this is for journaling to build your trading playbook. You meet that quantitative and qualitative quota. That's number one. Number two is you're marking up your order flow phenomena, and you're building out your checklists for your setup. All of this will help you become a better trader, and that's what the program is about. Then journaling and trading in Bookmap to build your playbook. We'll talk more about the playbook in upcoming meetings, and probably next month, actually. Or maybe end of the month, we'll get into that. And then I also want to show the progression here, which was a nice image that you guys have seen before, I think. But if you're in the Academy, you've seen it before for sure. This was something an Academy member did a while back in 2023. He started it in May, and he just had lots of markups of order flow phenomena in here. He's kind of learning the lay of the land in here, and starting to understand what is making up the price action in the order flow. And then he refined it down some months later, and he's looking at very specific things and really starting to understand the high liquidity transactions into high liquidity, and the order book and how the skew in the order book can affect price action, and put in the context of the volume and the transactions, the aggressors, and the order flow within the price action. And then he has refined it yet again some months after that into a full-fledged trading plan. Okay, so it's at this point here, he is, well, basically this is he joins Bookmap, applies for the Bookmap Junior Academy. He's in the Bookmap Junior Academy here, and now he's in Bookmap Academy building out his playbook. And that's what we are looking for. That's our goal here. I want to show you, though, a really simple plan, and I want to show you Laura's, if you don't mind, Laura. I was going to show Laura's spreadsheet here because it's exemplary. She's got all of her trades here journalized, and I want to just show you, though, how simple and what we're asking for in this spreadsheet. It's not much. It should take you guys, like, it'll take you maybe a while to journal the trade, and mark up the trade, but then the process of copying this and pasting it into the spreadsheet should probably take you about 30 seconds. Maybe a minute, but that's asking a lot. So basically, I'll show you here what the process is. So we go over to Bookmap Academy here, and let me show. I'll join to Academy. Okay. All right. So here we are in the Bookmap Academy, and then just see if we can find one from Laura. If not, no big deal. We can take one from John here. Once you've journaled and uploaded, or put this into Discord, just go over to the three buttons over here, three dots, click on this, and then all you have to do is copy your message link here. That's it. Then you go to your spreadsheet, you put in the date here. Okay, you can very easily put in the date, and then all you do is Control V. That's it. And then you've journalized your trade. Now we can go back and see who's made and journalize their trading activity, and we will cover it in these meetings. I just wanted to go through that process because, for some reason, we get all sorts of people making great content, but they're not putting it into their spreadsheet, and it's kind of funny. I don't quite get it. We try to make it really simple for you to go through this process. Anyway, let's jump in here and let me know if you guys have any questions about some of this stuff, and we can go through it. But let's start off here with David. So let me get up his spreadsheet here.
Sounds good. Good evening, good afternoon, and good morning, traders. Good to see old faces and new faces in. As I put in the chat, I've got Sharkbalu, who I can see in, and I've got John, who's in. Bruce, if I can just sort of chip in about, I've been involved with you for 5 years now? It's going to be something like that, sort of involved with the Academy and the sort of different guises that the Academy's been over the years. And all I'll say, it's well worth it. It's really worth it. I know everyone's here today to be well worth it, but it is, Bruce. And the defense of that, it's a bit like when we talk about using Bookmap. If it wasn't of value, I wouldn't do it. Jack wouldn't do it. Others wouldn't do it. We wouldn't put the time in if we didn't feel we were given something back. And also, don't get me wrong, we get something back in return for that. But it's really worth the effort of working those spreadsheets for Bruce, working on your posts and everything else. I think that's definitely worth saying, Bruce. Yep.
Yeah, thanks, David. Yeah, you've been in. Well, we had kind of a different version of it some years ago.
Yeah,
we made it more kind of public, and we're going into the next kind of phase of that now too, and really try to open it up. And then it's up to the traders how far they want to take it. The pathway is there.
Yeah, no, very much. In those early days, it was a rabble of Doug and Tom and me that you sort of corralled together. You'd seen various things we did, and you sort of got us onto various, I'll say they were team or Zoom calls, and we used to chew the fat very informally and have a bit of a laugh. It was good. Yeah, good days. Good days.
Yeah. So I think it's going to be much better days, to be honest.
Yeah.
And in another month or two, I think we're, we got some plans to kind of build it out some more, and I think it'll be a pretty strong program here. So
Excellent.
David, save me, take it away.
Yeah, sure. I'll run with the ball here. So if we can get maybe Sharkbalu up to the mic, if he's up for that, if John doesn't mind that. I've got one trade from you, Shark, and this is your shorting of ES earlier this week. Love your charting. I love the three charts that take us into the scene. You've got your candle chart, sort of sets what you're trying to do. Some really simple but very effective numbering of the chart. I can see the time of day. So, me in the UK, I can understand what we're doing, so I can go back and look. You've then got your Bookmap chart. We can see the trades on the chart. We can see exactly what you're doing, why you were doing it. You're also showing a bit of love and a bit of pain there, where you had a blowout trade at the very start that we can talk to. And then we've got the footprint chart, which I know we've seen before, but again, how you're using another side of Bookmap, another lens across the backfield with which to take the trade. So yeah, really good stuff. Good posting, and that. Let me before I ramble on. Can you hear me there, Sharkbalu?
I can. Am I audible as well?
You are, sir. Yeah, you're probably thinking, David, when are you going to say? So, do you remember this trade? Of course, you remember this trade from the start of the week, buddy.
I'm trying to catch the date on it, but I can't. Can we zoom in on one of those screens?
Looks like Monday.
Yeah, yeah, Monday. So it's a sort of just after lunch trade.
Yeah, I got it
for
right
the New
here.
Yorkers, and that. So we can see on the left, you were eager with the trigger. You got in. You're in the money, and either you went off and made a coffee or something, and then it sort of turned into, if I say a break-even trade, it might actually be a tiny little loss on that one. But talk us through if you can remember, please.
Yeah, I had it in my head.
Yeah.
That price was going to continue to break down from there, and rather than do my typical chase that thing in with my stop.
Yeah.
I let it retrace all the way back to my entry, and then it rolled over right at my entry, and then it turned around again. And once it just went slightly underwater, I grabbed my stop and I said, okay, I don't feel like taking any heat on this.
Yeah.
And then of course it rolled over again, so I jumped right back in. I jumped right back in with 2 contracts instead of 1. I still had some conviction in the trade, but I did end up cutting that one before it did make it to my target, as you would see on the other screen.
Yeah. I mean, I've got to put on my Monday morning quarterback. The 1025 there on the timeline. Again, easy to see. We've got some phenomenal buying on the left, actually. But yeah, as Bruce is just showing there, we appreciate the volume is fairly low through lunch there. But you've gone from red selling, and you've quickly got the green selling coming in at 1025. Which, sure, it's easy with Captain Hindsight to say you should have really tightened in your stop by then. But you were at the screen. You were watching this when it was coming back on you.
Oh yeah, I was.
Yeah.
I just for some reason I got it in my head that I was going to get a bigger move out of it, which eventually happened.
Yeah.
But kind of that my personal time frame, I said, okay, I'm going to hold this thing to target. And then when it started to roll over on me, my time frame tightened up. I said, I don't want to take heat on this, so I'm out.
Sure.
I'm immediately back in. And that's when I should have stayed convicted and held it to target, because it and it did eventually go there. But I think my words in my post were, it kind of took the wind out of my sails. And I had lost conviction. Here here in the kill zone, I get, Bruce mentioned it recently, I tend to get in a little aggressively, a little too early. And I got out right before she broke low out of my kill zone, and then went to my demand target.
But I love also you're focusing on the opening range bar. You've put that down, the 1 minute ORB, which will be music to quite a lot of us here, including Laura. That's for sure. So it's nice you're focusing on that. You can see on your chart up there, like 47 and a quarter. Now, if I'm right, Bruce, Bookmap doesn't have any automatic stops on it or functions on that. You might say, of course we do, David. I need to show you how to use that. Does it?
Well, you can trail a stop, but that's it.
Yeah, that's it. Yeah. So, not a sort of a broad idea that maybe you want to explore here, Sharkbalu, and I've talked to Stephen about it, and 1 or 2 others, and you may have seen the odd sort of post from me or video on that. Is that when I'm trading tight as today can be, I am using Ninja with its automatic sort of stop management, and I've set up, and I've trained that and I've programmed that. So the stop is quickly moving into market money. So when this chop is going on. Worst case, I just get out, as Tom would say, with sort of burgers and fries. But you can spend a day where you're actually, fattening your broker and not making any money. But at the same time, you can save your account. But it's something you could look to explore, but it's another platform. The candle chart, which platform is that on, please?
That's Thinkorswim.
Okay, that must have something else. Does that have something? Yeah, the top one there. That's it. Yeah, that must have something like that, doesn't it? Some sort of automatic trading, stock management. You can have an explore.
I played around with brackets and the ATR, automatic trailing stops and stuff.
Mm-hmm.
I prefer to be more hands-on with my execution.
Sure.
I've been focusing on trying to find the more A+ trades, something I can leverage into, hold on to longer. This was obviously not it, but
the setup was good. Your logic was perfect. At the end of the day, you were looking for this. It pulls up and it's going to pull down. Yeah.
I got out of this. You could kind of see it, the comparison on the charts. I got out of this. It had one more pullback, and then it broke low out of that range and went right to my target.
Yeah. As Captain Hindsight, so we can see those lower highs at the top, Bruce. We can see it's always easy to see after the event, but yeah. Should we have a quick look at the footprint chart, please, Bruce? And because I know we don't see so many of these, and it's great seeing you use these. So tell us a little bit about Donkey Face's exhaustion, please.
So that's me trying to see exhaustion through a much wider lens, where in this case, price is going up, but through that 15-minute time slice there's more sellers coming into the market as buyers are leaving, right? Price is going up, but
they ain't moving it.
Here.
Yeah. So we had a good buddy of mine. He used to go by he still goes by Donkey Face. He just doesn't hang out at Bookmap anymore, but he had a trade he called Ancient Exhaustion trade, and I go back and forth with him a lot, which is kind of that's where I actually learned how to use the market pulse price change divergence.
Beautiful. Yeah.
Locate an incoming exhaustion. He taught me that. So that kind of just looking for exhaustion on a somewhat wider view.
Okay. Yeah, it's a good chart. Now again, it's MMQBs sort of thing, but as I've talked about in previous weeks, and Stan may as well if he was here, where you've got that massive amount of buying and the price hasn't moved that much, which again, it's hindsight, but it does tell you a lot. They've put a lot into it, Bruce. They haven't got much out of it, and then a little bit of selling, and the price starts to come back down again. It's a nice tell. We've seen a lot of that today, and that.
Yeah.
Bruce, help. Let me pass the ball back to you, please. Thanks, David.
So Shark, you know what? Like, it's like you had said, like, you're aware of it. Like, you're getting in too early. You're aggressive, and antsy to trade. Hang out with Laura. And the patience she has, and she kind of waits for the turn. But no, I'm just kind of joking there. But like, I like, this is pretty telling here. And you're getting in short here. And I like it actually as a pullback. Because this is pretty big move, another big move, and then you're probably going to get a pullback to somewhere in here, I imagine. And you got it. You got that pullback. But all of this now, I know it's a little different in the higher time frame. Looks different, but you've got it coming back down to test where it broke out from in here, and you get buyers come in again. And this is starting to do the 1 2 3 pattern. It's starting to go back and forth and back and forth. Okay, the selling starts to pick up. You get a little cluster kind of in here and a little bit in here. But the buying comes back in, and I'm surprised it didn't go higher actually. But here though, like you start to see the something start to change and shift a little bit. It's not big, but it does. And you nailed that. You saw that, and then you got short in here, um, on the pullback. So I don't know. Like I was just kind of thinking out loud. Like I know this is your pattern, the 1 2 3, and you've gone over it many times. Um, Maybe to just an idea, maybe just to try is uh, don't um, don't worry about all this stuff. Just worry about this stuff. You know, in this case over here on the right hand side. You would worry about actually looking for the pullback to here, and then looking for those buyers to come in again, and then take it back up to the top of the range. Just kind of like just a pullback trade, and then maybe that will really help in starting to understand the turnaround for the reversal of the 1 2 3, and just wait for the heavy selling and a low volume pullback, and then take it down, and then cover a little bit, like kind of like you did here at the bottom of the range, and then try to get a runner out of it. And maybe that will help with your overall kind of maybe it'll keep you away from getting in too early.
Yeah, that first entry was the textbook front running the 1 2 3 R trigger, which just happens right after that entry is where my 1 2 3 R triggered, and that's what I was anticipating. Okay, this is going to hit my minor sell off low, and I'm going to get in. But that's the case of me. Okay, I have my higher time frame, the 1 minute opening range low above me. I have my demand zone below me. Right, I got the sandwich that I'm trading.
Yeah.
But rather than wait for order flow to say, hey, get in the trade, I took it based off the anticipation of that technical trigger. And had I chased, hindsight is 2020. Had I chased that move down with my stop, I would have got out, and then I could have gotten back in where I did get back in.
Yeah.
And I would have had three trades in that kill zone that were all profitable.
Nice. Yeah.
Yeah, I mean, this kind of turnaround in the 1 2 3, like it was pretty cool to see you starting to go through it in the footprint and the overall delta, and that was maybe kind of like a step back, and maybe that helped you kind of like with your patience a bit more, and let it kind of tell you that it's turned around, and then you're looking for a pullback and then get back in. So like let's see if this makes sense on maybe a small 1 2 3 right in here. So you've got, hold on, you've got your delta. So big negative here. Okay, that one's positive. Big negative, slightly negative, bit positive, very positive.
That's a big one.
And then you got a pullback here. Okay, so it's negative here. But then maybe once you start to see the positive come back in, you wouldn't get in that one, but maybe you'd look at a technical area in here, or maybe just above all that selling right in here, on the footprint, if that makes sense. So, and then that's where the squeeze is going to come, I would imagine. In this way, like you're just letting the delta kind of tell you to look for that shift, that you're that 1 2 3 pattern you're looking.
Yeah, and it's there. I'm my bigger picture is always short, so I am working on seeing the long side of things, but it is definitely not my strength.
That's okay. I'm the other way. I'm always bent out of shape. I always think we're going up, even on days like today. I'm looking for the long. It's okay. Yeah, I don't know. I just it was kind of a knee-jerk reaction, Shark.
just seeing that early entry, and yeah, that was
But I would also reinforce that point in a polite way that you could have had 3-4 points, as you know yourself, out of that. So if you've been with that sort of semi-automatic stop management or being more aggressive with your mouse, albeit a little bit out of your comfort zone on what you'd like to do, you could do that all day long, as we've said on previous sort of webbies, haven't we? You have 3-4 of those, 2 or 3 of those with a couple of contracts, 2 or 3 contracts. You can be done for the day within that power hour at the start or later on towards the close.
Yeah, in my typical, let me see, this is Monday the 24th. Yeah, my typical pattern, chase price in with my stop, and just get out, look for a better entry.
Yeah, and I do a lot of those. I can see some of the spot gamma guys in the room tonight, like Donna, who's joined us, or Mike, and obviously John. And I won't say I do those all day long, but a lot of my bread and butter is those 3 to 5 handle brutal scalps. Yeah.
And pleased to say that this particular Monday in question was the single best day of my trading career. And I mean, you don't see it in this trade, but
yeah, well done,
that's what it ended up being by the end of the day.
wow.
Oh, fantastic.
Nice.
Great to hear.
Way to go, Shark.
Very nice. Yeah, way to go. Way to go.
So this bar, just to put it into context here, this bar here is those big dots on the on Bookmap, right?
Yes.
Okay, got you. All right. So you were looking for it because it said we're going down. We're coming from up here, and I didn't see that. I just saw these like volume dots, and I saw this part here in your Bookmap chart. So you're looking for kind of the retest back up in here, then that exhaustion 1, 2, 3, and then like the move back down again.
Yeah, exactly. And if you look at the tick chart, you see even the bigger picture over the footprint.
Okay, let's that here. This one.
Yeah, that's the move I was after. That trend line that you're just about at right there. Right. I'm looking for the breakout of that purple up there is the 1 minute opening range, back down to demand, and I got it. I just, like you said, I jumped in too soon, and then kind of lost my conviction and got out at the end of the kill zone right before the move happened.
And then where did you, and in the candlestick chart, where did you get in? Did you get in again here? Was this it? Or did you get in over here again?
Actually, kind of both of those, Bruce. If you back up, yeah, there was one right before, there was one up at the, right in there, and then there was one more quick one on that next move down. Yeah, I had put in one more contract right there.
Right where the X is?
Yeah, pretty much. Yeah, kind of.
Okay. So this was your first trade. Then this was, well, this is the 1, 2, 3 pattern, but
Yeah. So I got out below that 2s where I closed the first trade.
Right.
Yeah, right up there. Got right back in, and then got out down there towards the X, and then on that next move down, I threw in one more contract and.
Right. So you got in again here, and then you got out here.
Yeah.
Okay, got you. That was good because, like, boy, it really tried a few more times to go. Yeah, this is kind of a tough read in here on this one, but yeah, it did what you were looking for in the end.
My goal being to start building a position in there, whether it's an open position or just P&L, and then use it to bankroll the rest of the day, but doesn't always play out. I'm still working on the execution side of things. I make a lot of execution mistakes.
Mm-hmm. Yeah. That's a kind of a tougher one. Like, well, it should be easy. I mean, but God, I mean, Steven caught me last week or this week with a few execution issues. and I left some open orders in there. It happens. I mean, Scott Pulsini, he does it all the time too. Well, not all the time, but he does it, and we see it. Uh, and God, it's just habit. I mean, you got to slap yourself on the wrist, time and again, and it's still going to happen. But this is, I don't know, what do they say? Like if you own a handgun or something, it's not a question of if, it's when. It will go off by accident. And
Exactly.
so which is like pretty scary. But anyway, yeah, that's just from, I guess, maybe just trying to build out habit and just like being tough on yourself, I guess.
Yeah.
I don't know.
I'll continue. I will continue to post my real time execution
Yes.
foobars like this, and continue to work on building that pattern recognition through replay. That's what works best for me. I think I may learn more from these troubled trades than the perfect trades.
Yeah.
Yeah, absolutely. And I don't know, like I mean, it gets so tricky in the reversal patterns. I feel, and that's why I was kind of had the suggestion of like, let them pull away. And even on this one here, my suggestion, it failed, right? It's like, okay, now we see the sellers coming back in, but yet it does another few gyrations to the upside until the sellers come in. Here they break, and here the retest back. And now these are much. I mean, God, it's so Captain Hindsight, like David says. But I mean, these are so much easier when it's kind of told us that it's going away, is pulling away from all of this structure here.
And you can see that plain as day, where that initial resistance becomes support and then becomes resistance again, where you just pointed at. I mean, that's as plain as day on the footprint chart.
Oh, really? Okay. Jump back to that. Oh, yeah,
When you
right
bring it
here.
That's that white rectangle, Bruce.
Yeah, beauty.
Yeah.
And
There's
then,
a question.
oh, go ahead.
Sorry, Chippin. There's a question about this chart in the chat here, Bruce, which it's regarding some trading is live. Can you put them side by side to show volume dots and the footprint? I don't think you can get volume dots on this chart at the same time. Can you, Bruce?
Oh, yeah,
you can have some...
Yeah, you can. It's a mess.
My bad.
It's a mess.
Okay.
Yeah. So yeah, that's no problem. But yeah, I mean, I'm sure Shark has done it, and then he's like, oh yeah, that's just too much.
Can't see that. Yeah. You're very welcome trying to
I quite often take the last price line out of there too, and just look at the feet.
Okay.
Yeah. That's a good one too. There is a tool though. Trading is life. Now I closed my Bookmap today, but there's a tool. It's a kind of a link tool on the toolbar, and when you click on that, all your other charts, no matter where they are, like they will all sync. So if you zoom in and out in the time, all the other ones will zoom in and out as well. So that way you can always look at you'll be looking at the same time frames basically. So
nice.
maybe that helps. Okay.
Well, thank you for the insight, guys. I do appreciate it very much.
No, you're welcome, and well done on your blistering day you had there. So it's great you're able to, I say, bounce back. It was a small loss, but you just be able to get back.
Yeah, thanks, Shark.
The canvas and swing in it. So well done, buddy.
It's really great. Like that you share that, and then like you'll share your mistakes as well, and not be afraid, and it's great. So we can give you, try to give you the best feedback that we can, and I don't know, I hope it's helpful.
I consider it paying for information, and then that's information I can take and apply to my future.
Well said.
Yeah, and you've got that replay mode. You've been using that really well. You know, if I don't know, I find it's really funny, like using that replay mode. A lot of times I find that I'll go back and retrade it, and I'll make the same mistake, you know, a few times over again. I'm like, Jesus, I still saw it that way. And then and finally, until I kind of try to break the habit, you know, and then and see it a little differently. But this is a good tool, and you've been using it when, and I hope it's been helpful for
Oh, it absolutely has.
you. Yeah, yeah. Okay. All right. Well, yeah. Thanks, Shark.
Yeah.
Thank you,
Great work,
guys.
buddy. Catch you soon. Thank you. Shall we segue into John, please?
Yeah.
You get John on the mic. I've got 3 trades from John. If we can go down to the very bottom one,
Okay.
bottom of the chart, which is the black track. This is the one that Jack was talking about today with us, Bruce. I don't know if you saw that. So
Yeah.
he was very tickled by this, John, as you grabbed the mic, all being well. He was very tickled by this one. I haven't really written much up on it, Bruce, because of course that chat with Jack was towards the end of the day. But what he's rightly pointing out, apart from the great charting by John, the checklist, etc., the great trade that he got, what he was describing, and I can agree with that sort of classic oil trade where the price is scooting down, as we can see on the left, and then very quickly it gets to a level, and then you get a massive amount of that Tarantino blood, if I can squeak it in there, if I can get it in there. Yeah, massive Tarantino blood that comes in, and then my phrase, we're off dog walking. How far are we going to walk down before we come back up? John, how's your day been, sir?
I think you're still on mute there, John.
Still on mute.
There we go.
There we
Hey,
go.
there it is. Okay.
Welcome, John. Welcome.
Sorry about that.
That's
Thank you.
okay.
Yes, it was a good day. It was a wild day. I had 4 trades of all the possibilities today. I had 4 that I felt comfortable with, and I still felt like I was going to have a stroke. So this is just wild markets, and it's the reason why I've been getting up early and trying to get some trades done, including looking in other markets, because I am concerned with this risk. Not so much from a dollar standpoint, but the charts are so erratic that it blows out my setups and the very precepts for what I want to trade. So yeah. So
brutal pull-ups today, John. And you can, you know, even towards the end of the day, I'm not on about the last sort of 30 minutes sort of chop in there. I was just looking earlier on, and you can have sort of 10, 12 handle pullbacks within 10 seconds.
Yes.
Just horrible stuff. But everyone,
So,
as I love this trade. So over to you, sir, please.
Sure. So liquidity, you know, it built the foundation for the chart. So that's listed as number 1. I noted the liquidity above and below, and it's just like anything else I do. I don't have any levels here, of course, gamma levels, but we do have very well defined liquidity levels. And so I just traded from one level to the other. And when we got down near the entry, we see that liquidity filled down there at 70.10. And then one thing that I picked up by watching Moby's work, he's a very seasoned trader. For those who do not know Moby,
He's
a seasoned trader, and he's an outstanding teacher. And one thing that he was talking about one day was the chart volume profile column, just selecting the delta. So you're looking at net buying and net selling. And when he was talking about that, I thought I put my own little twist on it, and I've been using it to highlight clusters of buying and selling.
Beautiful.
And you can see down there around where the liquidity was at 70 and 10 and $70, that there was a fair amount of net selling down there. And my thought was, well, if I can get long here, those new positions that were established, however many there were, would probably give up pretty quickly if this thing started to go out to the top of that. And so that was the basis of using that. And so I got long. I felt, that's enough to carry me up through the first target, and then I could manage my stop and hopefully get up to liquidity at the exit target. So pretty straightforward as it goes. Yeah.
No, beautiful. If you haven't got the ice on there, or have you? And haven't got my eyesight on tonight there, John. Do you follow the ice and the stop much in the
the icebergs, David?
Yeah.
Yeah. I think I had them on. I just don't think there weren't any here.
Okay,
I could be wrong on that, but
no.
by default, I generally have those.
I thought so. Yeah.
But I don't think there was much ice participation here. As we started to come down to 70-10, you can see some of the stops that were being hit
Big
down
time.
there, which is often a precursor to perhaps a reversal. And then when we finally got down to 70 at liquidity, it really turned nicely. And it was
Big time.
Yeah, it was a
No, it's a great trade.
Yeah.
Yeah, and it's a little while since we've sort of talked oil, I think, here, Bruce, but it does show other assets that you can go and trade them. That's not about John, but you can go. You've got the setups there, and the liquidity, I think, is more so in these. John, do you just look at, say, one contract on? Like for the J there, or I sometimes find I'll bring up on tabs a few different contract.
Yeah, as it approaches expiration, David, I do.
You do, okay.
Yes, sir.
But they can be really odd, can't they?
That's the thing with with crude oil. You're always rolling over, so you almost have to do that. So yes, I do. Yeah.
And a great shout out for Moby. I can see that in the chat. Yeah, we missed the mob. So I when I was on earlier on, Bruce, I forgot to mention the Moby was in that loose gaggle of traders used to get together back in 2019 or whatever it was. So.
Yeah, that's right.
Bruce,
that's right.
A segue to you on this chart, sir, please.
I was a little taken aback by this, John. This was kind of outside. It seemed like it was kind of outside your wheelhouse. Like there was no kind of higher time frame levels in here. I mean, I guess you're looking at the big figure here, or it looks like low of day here in your SVP, and then you're looking for like you said, the liquidity here, from here to here. It's the play that you're looking for. And I was it played out just picture perfect. But yeah, it was just different than your other trades, that's for sure.
Well, in this instance, Bruce, there weren't any other levels. Yeah, this is it. I mean, there wasn't a whole lot of liquidity being posted outside this range. So it was really quite isolated. It essentially is pre-market here. But in this instance, there really wasn't much else to show. No.
Yeah. No, I mean, and it also just goes to show you that, like, rely on a few, good things in your setup, and know your setup. It doesn't really matter.
That's it.
So anyway, it was. Now this is East Coast time, right?
Yes.
Okay,
yes,
so this is crude open here.
At 9 o'clock. Yeah.
And
yep. It was.
Yeah, I mean, boy, you nailed it. The funny thing on this one, just coming from Sharks, I don't see much buy volume really coming in yet. It's mostly selling, and you nailed it here. I mean, this selling in here, and then this selling in here these are likely either people getting stopped out, or maybe selling short, looking for 70 here. And then getting squeezed on the way back up. But I just don't see. I guess the only time I see it, and it's so easy to say in hindsight, is at the open here, when I start to see some of the buy volume come in. But you got in really early here on that. And so what was the and right before the open, so you were thinking, okay, look, this has come down high enough, these guys are getting filled all the way down, Starting to see some buying clusters. I know there's high liquidity here as a target. And then I've got, and you've got the liquidity set up, that's for sure. And you got the capitulation here. So then you're just looking for, okay, like, you know, now I see that these guys it might be capitulation, it might be a squeeze, or both. And then you're willing to play that and give it a shot. Is that right? Assessment?
It is. Just missing one thing. You had new liquidity come in at 723, 2722,
Here. Yeah.
where my first target is. Now,
Oh.
we're up above where my first target is.
Right here. Right.
See, yes. So you had that new liquidity come in. You had some selling come in. Like you said before, at 745, there were some stops that were hit down there. So, you know, with those big volume dots where I showed the liquidity being filled, it really didn't carry it down. And it failed to reach liquidity down there at 70 even. So, you know, and then if you look over to the right where I was discussing the delta table, there's a fair amount of selling down there, and it didn't carry it down very much. They were not successful. So especially right there at 10 and 11, and that's about where I got in right there. Yep. Taking out that little block right there that you just, that's exactly it.
That's what you're looking at. Okay, so that was the key.
That's what I'm looking. Yeah, that's the key. Plus the new liquidity that was being added up at 22.
That's great to hear. All right, so those
two things together.
And then this.
Yeah, and I need 10 ticks to that first contract. I can move my stop in and then let it go.
Nice.
Those two things together. That's right. So yeah, you're spot on. But yeah, that's it.
Yeah, beauty. Yeah. It's just a beauty. I mean, like, it looks just scary to me. I mean, like, I always, you know, I want to see the confirmation in the volume, in the bars and the dots. But yeah, I'm just kind of curious. I mean, this is something that you were kind of playing around with, and maybe is it a strategy in your playbook, or is it something
it's just, I think really you were showing a footprint chart before, and I just think this is a real easy way to see a footprint.
Right.
To me, in my eyes. I can't do all the numbers on my screen. That just, I thought it was interesting, and I looked at it, and I thought I was fascinated by it. It's a tremendous body of work, but it's not for my eyes. But this is a way in which I can just identify clusters, and this was well defined in here, and it was a failure to the downside. And these are the things that I drew off of that. So yeah, I have it on my charts now. I've been working with it. Moby uses it a little bit different, but he was showing it one day, and it hadn't occurred to me that option. And so when I started looking at it, I thought, oh, okay, let's see. And yeah, it's nice.
Nice. Yeah, I have a question, how you are dealing with that. This is something kind of new that you're adding into your trading. I think maybe it'd be great to hear you speak about how you're being kind of careful, or how are you like integrating it in and not messing up your kind of confidence and mindset with your other go-to trades that you've been trading for quite a while.
Well, this since the new administration has me questioning the risk associated with it, and I guess it goes back to losing everything I had in October of 1987. I started in '85. First 2 years I couldn't miss until it stopped. And you know, when you're in your 20s and that happens, you can recover. You work two jobs, sleep in the car, get extra shifts, all that kind of stuff. But if I get twisted now, my goodness, it would be a problem. So I have to be careful with the risk. I have traded crude oil in the past. I started out trading gold. And when I was trading gold, it was less than $400 an ounce. It was like $360.
Respect.
And but so yes, I get up early. I like the pre-market because there are not as many headlines, and so I've been looking at different things. And but boy, it just seems like everything is on edge. I subscribed to the other exchanges that I didn't have, and I started looking at corn, and corn looks like it's on steroids. So it's it really is a volatile time, and I have a nest egg build up, so I don't have to take the risk, and I need to be cautious because at this point I can't do what happened to me, 35 years ago.
Yeah.
So if it means trading crude oil, or if it means standing on my head at night at 3 a.m. in the morning and get ready for the London Open,
Joining me joining you at 3 a.m. Yeah.
yeah, that's what I need to do. So I've been pretty aggressive in the pre-market in the ETH for that reason, because and if you just look at today's price action, that's just not something that I feel I can do. And so I'll use the same strategies if I can find one, but I'm also doing some research. I'm not an options guy, but I might get there pretty quick. Learn up on it, start doing flies and things like that, because there are times in which, for me, the options are too risky, and I'm a futures trader. I mean, a future investor.
Me too.
But there are times in which you just have to call it. And like today, like I said, of all the possibilities during the RTH, I actually took two. I took two this morning in the ETH, and then only two, because I just felt like, no, this is too rich for me. I'll let the young bloods have it.
Wise words, John. Wise words.
Yeah.
Yeah.
I guess you have to live through something like that before it really hits home. But yeah.
Yeah. No, definitely. The other thing on here, John, I find, and I'd be interested if you do as well, the oil when it opens, as Bruce was rightly pointing out at the 9 o'clock, 30 minutes before New York gets going, is that I find the price, when it starts to move, it can be a better direction. It can be a bit more like ETH, as you and I trade the mornings, London mornings. And you're seeing that here. It gets going, and it a poor phrase, it's an oil tanker. It will typically go off in direction for a set period of time, unlike futures, unlike index futures, but that may be just anecdotal. Okay, cool.
Yes, absolutely. And it trails USO pretty closely, so you can look at that as well, which I do. Hero was not effective on USO because I don't think there's enough volume there. But I do plot the levels. I know where the put and the call walls are, and but it's not something like you could use it with the SPY and place hero on it.
No, and we could
not there.
And we can segue to one of those now, if you wish, John, if that's okay with you, Bruce. If we're done on this one, this would be normally a time when David would say, "Well, what about you, Stan?" But Stan's not, unfortunately, with us now. He's not too well, I don't think, Bruce. Otherwise, Stan would be in and talking liquidity.
He would love to talk about the liquidity on this.
Wouldn't he?
Yeah, I mean, this is a beauty. Like, just the whole thing is outlined by liquidity.
It's Stan, isn't it? All over. It really is.
Oh, that's his MO. Okay.
Yeah. No, I have a question actually before we jump. It's this one up here. Because this is kind of new as well. I really like it, and I'm kind of wondering, like, how are you? Your charting here in journaling is fantastic, and it's really clean. It's really clear. You're communicating tons here, and then I saw this up in here, and I was like, oh, okay, well. And so are you kind of manually or using like maybe an Excel spreadsheet or something like that to input like, kind of your risk parameters?
And that's actually, when I posted this, I realized that I made a mistake. So that's a good question. I made a mistake on here. But what I'm interested in is the initial risk that I'm taking. Once I get the first contract off and I can move my stop, then my risk has been addressed. So what I'm doing here, and you see the exit target where I have the risk, that actually should be 8, not 36. That was a typo on my part. Right, exactly. So, but the key is for that first contract, I'm taking at least a 1-to-1 risk. And anything less advantageous, that will nip the trade. And so that's always been a part of my trading. I just started posting it. And I thought it would be relevant because the risk that we have in these markets now, that's the last question I ask is, hey, the chart looks great, but can I afford to do this? And so if that were entered incorrectly, that would be like 4-1 on the or 5-1 on the exit. So, and then the average would be the average between the two risk to return values. So, but the main thing is that initially I don't want to be, less than a 1-to-1 proposition.
Gotcha.
I want to be more like 1.5 or sometimes 2. And sometimes that nips the trade because it's not worth it. And I think that's important during these times. So that's why I started to include it, because I thought I better start showing it. But yes, it is a spreadsheet. It's a itty bitty little Excel spreadsheet that I have up on my screen. And I'm always punching in those numbers to make sure that I'm on track in terms of risk. And that's something that Moby talked about as well. That's front and center in his charts. He's always talking about that. And I've been doing it a while, and then once I saw him do it, I thought, okay, this needs to become a priority, and so that's what that is.
Nice. And why I'm so curious about it as well is I'm trying to talking to the development team about these kinds of tools for trading and how handy they would be for you, so you don't have to punch in these things all the time. Maybe you can kind of automatically do it, or you can have some sort of risk parameter profiles like a tab or something like that. I don't know. So it does it kind of automatically for you. But anyway, it was just that's why another reason why I wanted to ask. So, yeah. I'm sorry, David.
No, great. No, great points. Great points. Next, if we can segue into John, Bruce, is a trade farm today. John, the foot sits at the top of the spreadsheet there. That's a short on ES.
This one here?
Getting towards. Yeah. If you want to start with a hero chart, the white chart, maybe.
Yep. The hero chart sets it up. Yeah.
And away to you, sir. I mean, this morning you and I were hand in glove on different trades. And I think I'd gone to lunch when you were taking this one, if I'm right. But take us away, sir, please.
So this is during the pre-market, of course, and that blue line represents both the put and the calls. And basically what it does is it just gives you the overall net flow of the options. And what they're doing here is they're buying puts and they're selling calls, some combination. But the takeaway is that people that are taking the other side of those trades, the dealers, they're going to have to get short to offset the risk, to offset that delta. And so that's what that is showing you, the net option flow. And so from this sets up my predisposition to look for shorts only. Unless and until this changes, I'm looking for shorts after 740.
Definitely. And within that context, for me, I think probably the same, John, is that the London had a strong morning. It was sort of over 10 points, 20 points up. And it was then getting towards, I say, my lunchtime. So it's getting towards lunchtime London. And it's time for that sort of dog walk or whatever phrase for it to go back. And when you're seeing that then on the hero chart, it aligns.
And that's what I'm looking for. I'm looking exactly, David. We're looking for that alignment. And this is where spot gamma is so good. This is the S&P index, so it's available after 3 a.m. And then the S&P equities, that's a proprietary model that's going to kick in after the open naturally. But no, this has been a very effective tool for me to trade with the flow. And then, once you have the option flow, and then you're looking at the order flow, and that's where Bookmap comes in. The liquidity levels, the order flow events to build a case. But I am looking for shorts in here. Yes, sir.
So, Bruce, if we can segue to your chart, so to speak, in the Bookmap chart, we've got two here, we got that lovely checklist, John. And again, for new traders, this is just another beautiful setup. We've got the checklist for us to sort of understand. We've got the time of day. We've got annotations on the chart. So it's really easy to follow. It's textbook, John. Over to you, sir, please.
Sure. So again, very much like crude oil, this frames up on the basis of liquidity. So that's number one. I note the liquidity above and below. And of course, the one below is toward VWAP. So as long as that's not taken out to the upside and Hero is going down, this was an excellent place of relatively low risk because you know the flow's going south. We're coming up to liquidity. We have sweeps coming up in here, which are just ugly things that they've done for years, which failed to take that out.
Yes.
So when they did it again, I clipped them, and we have liquidity down at 150 or 6001. That defines my first target. We're at number 8, right?
Oh, here.
Over
Yeah.
here. Yeah.
Um,
And then
I'm sorry. Here's 6001. Yeah.
yeah, yeah. So that new liquidity that defines. Generally, I'd be taking at the low of the last range, which would have been, I can't see the chart, 9.5, something like that. But because that this liquidity was there, I thought, okay, we'll probably get down there, and if not, I'll quickly bump up. But we did get it anyway, and it was volatile in here. And then um, it came over, and I added to my short because we had sort of that island of buying in there at 1150, where I have number 10, Bruce, where I added to my short at that point. Up there, exactly. Moved my stop over a little bit, and then I got my first target off. Like the first contract, and then I mapped my target at VWAP, just above liquidity, and that's how that went. Yeah.
Beautiful.
So I figured, they'll probably go down there and tag liquidity at 2, but I'll be happy at 3.5 at VWAP. I try not to fight VWAP.
No. Perfect, John. Absolutely perfect.
In the next chart, I actually had to edit. I actually had to move my target. Do you have the next chart, Bruce?
We do. This week, John, I've actually put all your 3 charts in rather than just putting one down. You've noticed that?
All right, so this shows the management of it, and you can see that new liquidity came in here at 450. So I adjusted my exit target rather than trying to get through that liquidity at 450. It would be a nice trade just to take off at 450. So I moved it up. It touched it, didn't fill me, so I had to chase it a little bit. Doggone it. And you can see off to the right, there's another example of that chart volume profile there, showing the sells, and then once the buyers took over, it went north from there.
Yeah.
It ultimately came down and it tagged that liquidity, interesting enough, but I don't like the run. You had a good trade here. It was profitable. It's something I can put in the bag and market as a profitable trade. So that's how I managed it. Yes.
Nice.
Beautiful. Really nice, John. Really, really nice. Really nice trading. Not a lot to add, Bruce. I'm gonna have to throw the ball back to you, sir. Thanks, David.
So, no, I mean there is something here like those that are using the Hero and other services in here. So I have a question for you. Is like, here's your 740 here, but we don't really know at that time, like it hadn't dropped. So, but you got into the trade around that time though too. So
yeah, but it did kind of level off there from 730.
Okay.
Right. So it just, and that was anticipatory on my part. No question about it. But we also had that frame up in the Bookmap chart. But yeah, if that were really strong to the upside, number one, Hero fell down pretty hard there at 730. It recovered somewhat, but it was kind of making a double top in there on Hero.
I see.
And so I thought, I was a bit anticipatory, and I was just selling out the bottom of that Hero. Yeah.
Okay.
Yeah.
No, it makes sense. I mean, like there's something in here that's really great. That you're this is kind of your higher time frame gauge.
Yeah.
And then you're jumping in, and then matching this up with liquidity. And here it is. It's right in front of you. You know, you see the move and the spike up into it, the sweeps, etc. And then you're thinking, even though in front of all of this volume in here, and then, but it's volatile in here. I mean, there's volume to the upside, to the downside, back to the upside again, and then you're getting short in here up near that, right in front of that liquidity there after a sweep, and then, but you've got order flow here, literally, and like then you've got your higher time frame kind of anticipation. That your hero, you've seen it enough that you think, okay, look, this is probably going to drop, and I've got this really nice kind of heavy wall or a few layers of liquidity in here, so I'm going to take a shot
with a 5-tick risk.
Yeah,
that's what it was.
Yeah, and then you got that, and then this is also a little. It seems like a little outside of your playbook. I really like it. Is now you've seen the turnaround in here. You see the volume to the upside, and then all this back and forth. Sell side, and equal lows in here, but on this pullback in here, and then now you're adding before your first target is hit. So now, are you taking 2 down here on your first target? Or,
yes.
Okay, and then you're holding 1 for the runner.
I'm holding 2 and then 2 for the runner.
And 2 for the runner. Got you. Okay.
Right. So 2 things are working there. Number 1, Hero was starting to go down pretty hard at that point, and you had the CVD going down pretty consistently. So you had order flow and volume moving in the same direction. And so you had that little blip up of buying, and I sold the bottom of that with a real tight stop in there to see if I could hook it south from number 10, where you were talking about.
Yeah.
I sold out the bottom of that. That had to be, prices had to take out the bottom of that bubble. And that's a pretty sizable volume in there.
Not here. Right here.
No, I'm taking it up where I have marked at number 10, the
Yeah.
short. That's what I'm talking about.
Right.
What I'm saying, right at the bottom of that very bubble. So it would have been 11
I see.
quarter.
Got you.
Yeah.
Okay.
Yeah. And so the top of that bubble would have taken me out. I'm taking a very small risk there.
I see.
I have my stop showing for that first contract, but I should clarify it. It's just that I don't want to junk up the screens too much, but in real time, for that second add-on, especially because I haven't reached the first target yet, my stop is really tight. That's got to go down. It's one of those where it has to go down immediately or I'm gone.
Got you.
Right. Yeah.
Got you. Okay.
Yeah.
Would you still like? Oh, maybe you would exit one of those and then still keep the original, because you're in a real nice cushion up here. On the original.
Yeah, so I'm adding 2 at number 10, so both of them would come off.
So you take both off if this started to not work out.
Yes.
Okay.
Exactly.
Got you.
Yeah.
Okay.
That has to go.
Okay.
Yeah.
Okay.
Yeah.
Great.
Yeah.
Wow. Good. This is great, John. Pretty aggressive, and but you know what you're looking for, and you're handling and managing the risk. So yeah, really nice stuff.
Yeah, I think the 2 takeaways are option flow and order flow working in the same direction. The volume going down with the CVD, and the option flow.
Yeah.
It's been a good conversation.
Brilliant stuff. Brilliant.
Yeah.
I've got a third trade here.
Uh-oh.
It's rinse and repeat. So maybe we can just dance quickly through it, just to show the trade we just talked about wasn't a one-off. So this was earlier on in the week, John. This was actually, I think, in the RTH hours, but it's a similar sort of thing.
Same thing.
If you got the hero going for you, spikes up to hedge wall and some key gamma strike and but here actually, as we're seeing there, as you rightly pointed out, Bruce, is Hero lagging, or is ahead, or is it just aligning and so forth? I lean towards more liking to see it sort of slightly ahead, and we saw that a couple of times today. And other times it's just you're not picking a fight with the gorilla. Back to you,
Right.
John, sir, please.
That's exactly it. As long as it's not going against you,
Yeah.
then you're usually on the pretty good right side of things. But it's essentially the same trade that we just looked
Yeah.
at. Heroes going down. We had a little pop up, and I got short from the option flow. So if you can bring up the option flow, it should read the same way. And it's easy to keep up with my checklist because it's usually the same. And
Rinse and repeat. Beautiful.
Exactly. So the liquidity levels, they define the target below. I note where VWAP is. In fact, this was a VWAP short trade. So I have Hero working in my favor. We punched down through VWAP. I got short on a retracement to VWAP. We failed there. I show that buyers failed at VWAP. That's a significant event for me. And I sold out the bottom of that bubble right there.
Yeah.
Yep. First target is at the bottom of the range. Perfect. Yep. Had a little outage there. And then came back up. I got the first target off. We had some buy sweeps come up. They failed. I sold out the bottom of that bubble. Came down, got the first target, and then I was able to get down to my exit on this trade, and then I carried the first contract set down to the exit where I had it originally marked down there, low liquidity. Yeah, exactly.
Wow.
Yeah. And the reason I did this is because that new liquidity that came in there at 50 or so, 89.50, I figured, okay, we'll probably get to that. What happens from there, I don't know, but I'll just pad the account here a little bit with a short trade within this longer term trade. And so that was a high percentage pass, I thought.
No, great stuff.
The buy sweeps set that up. Those buy sweeps and failures set that up. And again, if you wanted to look at it over to the right, you can see that delta column showed that buying in there right around 6,150, right in that little cluster there. And then when that gave out, down she went.
Nice.
You see that, Bruce? That little cluster there at 6,000, little down a little bit further.
Oh, here.
Right down a little bit. Yeah, where you had the buy cluster in there. You had the failure.
Right here.
That's exactly.
Got you. Okay.
So that's showing, those buy sweeps in there. And then once that was taken out to the downside, that was the idea. I said, if I can get short in here and they hit the bottom of that range, it'll most likely go. And I'm willing.
And the red volume delta bars at the bottom, one of my key things I love to look at. They're holding court for sure.
Wow. Compliments, John. I mean, like, this is, I mean, I don't know. To me, this seems different than previously other things that we've covered in terms of the trade management, and all with the risk and assessment in line, but you're adding 2, 3, 4 more contracts into this, or positions into this, and before taking some off in some cases. And this is I mean, you can really just see exponential growth in your account with this kind of management. I imagine it's a little nerve-wracking, but on the other hand, like, man, once you get on the right side of that, like, it's also just it's incredible to see. You nailed all your targets all the way down. Really, really great stuff.
Yeah, because when the charts shape up like this one, I am a little bit more aggressive because they're not shaping up all that much to my liking and within my risk tolerance. So when it's there, yeah, I'm I don't want to add from the very beginning, but if I'm in a trade and it's working in my favor, that's when I want to add because I'm not really adding to the initial risk. I have a little bit of profit unearned under my belt,
Mhm.
but I am jumping on it a little bit more aggressively when the charts shape up because they haven't been
Yeah, yeah.
for me.
Yeah, and I mean on these trending days and things like this, the bottom drops out like, phew, I mean pretty quickly.
Hmm.
You know, you're up, massively,
Hmm.
and but the thing that's so great is uh, all the way through this, though, your risk management is the guiding principle here.
Hmm.
Yeah, very
Hmm.
much.
So
I think the last takeaway, it's what you were talking about earlier about the value of the checklist. I think it's the checklists that are going to carry you through during these volatile times. If you have it in place and it's well structured, you know exactly what you're going to do. If you're playing around in this market, I think you can really get hurt, whether you're in a prop
Mm.
account or your own account. I don't think it's the place to play. But if you're well structured and defined, and let that, I just let that be my guide and let the rest of them pass up. And it's kind of frustrating sometimes, but you have to do it from a risk standpoint. And that checklist is going to be your guide, I think. That's why it's a priority for me.
yeah.
Very wise words, John. And I know I've said this on previous sort of catch-ups, talking amongst friends. We can have it, Bruce, where I'm taking a particular trade, John isn't, John's taking a trade, I'm not, and Jack is, because we've got our own separate setups, our own separate checklists, and we're working those in a surgical and clinical way before executing. I think that's a fair point, John, isn't it?
Hmm.
Could I ask you, Bruce, to pick up in the chat? I've popped a chart from Hero from today. It'd be interesting to get John's take on this. And so this is the Hero. So it's in, yeah, that's the one. Yeah. So I can see a couple of comments from DNT Matter rightly. And this, Bruce, what we were touching upon in pre-market. So, to remind everyone, I'm a futures trader and I use the options information as another lens across the market, across everything I'm seeing, very much like John's been doing, as we've just talked about for the past sort of 30 minutes or so. Hero on here, if Bruce zooms in, where it says current hero in the top right box,
Hmm.
has got 3B,
Hmm.
3 billion, where it says current hero.
Hmm.
And, I
Point
simply,
me. I'm sorry. Oh, here we go. Right here. Got
yeah,
you.
Yeah.
Got
yeah.
you. Okay.
Hmm. Hmm.
And if this is within the realm that DNT is rightly measuring, if you were just looking at this alone, you could have been going long all day as a setup. You could have been going long all day and been torn a new one, a new one, and a new one, and you could be now looking for a piece of rope because you've had such a bad day. If you were just looking at this,
Hmm.
so, like everything, some days the tools work brilliantly for us, and other days they work less so.
Hmm.
Now, it's easy again, Captain Hindsight, it's after the market and so forth. And again, John's seen the chat. I've seen John's chatting in and out of Spot Gamma Discord today, as some of the others have.
Hmm.
This market, from where David sits, is hugely manipulated.
Hmm.
And what this chart is showing me today is that if I say the powers to be, or whatever it is, and if Brent was on the call, he might be going about hedging. But a lot of ammunition was being shot today to try and support the market and stop it from falling so far. This chart to me shows that.
Hmm.
This is 3 billion net
Hmm.
of options going through on the bid. And I'll get John's lens in a moment if I may.
Hmm.
So what's my point or my answer to DNT and others is that I've got my ninja charts, I've got my bookmap charts, and this spider was out of line to what I've seen elsewhere. So I was always cautious in what I'm doing and going short. But at the end of the day, I've got several lenses. John, your thoughts, please, sir.
I don't use it when there's a divergence between the two.
Okay.
Right.
Okay.
So they both need to be running in concert.
Yeah.
That's the strength of it for me.
Hmm.
Otherwise, it's just something I look at that I'm aware of. Um,
Okay, Tom.
I go back between the index and the equities,
Yeah.
because sometimes, there is some hedging that they'll use with the index, and you can get a little better idea with what the equities are doing as a true measure of what the stocks are, how the stocks
Mm.
options are behaving. But in general, if there's a divergence on the hero chart, it has no value for me in
Different.
terms of a trading vehicle.
Yeah. The interesting part on this chart, Bruce, is if you look at 12 o'clock on there and you go to the left of that, then you've got 11:30, which is London close. And you remember, John, I was screaming. I thought we were going to get a bit of traction. Like you could see the blue line was going massively up there, Bruce, as we got through that London close. And I thought, right, okay, they're throwing, you can look at how that's moved. That's moved 1.3 billion, went through really quickly, and I thought, right, okay, the market's it's going to pick up now. It picked up a little bit,
Hmm.
but in the post lunch, it's just gone down the toilet.
Yeah,
It really has.
Yeah.
It really has. But no, some good inputs there.
Hmm.
Tom, welcome.
Hey, Tom.
Well, hey there. Always nice to visit. Hope you can hear me.
Yep.
We can, sir. You keeping well?
Today was a interesting day.
Yes. Big time. Did you have a show today, Tom? Were you steering everyone along?
Yeah. We it was short all day, and the stream. I covered it in the morning. Well, we start. Well, you know what I do, but I don't want to take any time away from what you guys are doing here.
No.
This is all very interesting, and I'm always interested in learning. So
Every day's a school day. Yeah,
that's right, especially in this business.
it is big time. Bruce, what do you think, sir? We've banged on about options and everything else, and we've tried to cover our bases and our butts and everything else in between.
I mean, it's just I would I mean, you guys are the pros reading these options charts, but to me, I it's all hindsight. I see it in hindsight. In fact, like I kind of see like, okay, you're hitting on this, and then I would probably see this in here, as the these are the puts, right, and these are the calls here,
Yeah.
and they're all going in concert. I'd be going, well, I'm long,
Yeah.
I should be long, around 11:30 or so. But then, I think I just kind of get twisted around a little bit. I'm wondering how you guys are reading these. And then I know what you're looking for in Bookmap. You're looking for that order flow to support it. So if you did see you were at a level price-wise and there's just massive walls of liquidity after another, or something like that, then you probably got the right direction. But this I'd probably just get whipped around and then whipped around again to the downside here, and then I don't know how to read this, but I don't know, just kind of wondering your guys' take on hero stuff.
Yeah, great points there, Bruce. And I think you summarised it pretty sort of well, as I say, and maybe not fully answer it, but or just reiterating what I was saying. It's one of the I use just one screen, as some of you have seen. Stephen who's typing away there. I just use one big Odyssey screen. Spot Gamma takes up a third of that. I have this chart up, and then below it I have a couple of other ones, as like Trace and so forth, and then I've got Bookmap on one side and then Ninja on the other. And exactly like John said, I like things to be aligned, but today when I saw it, what was going on, and seeing with as you were talking about, John, all the various sort of political headlines, if we just throw it under that bus coming through, and I think, yeah, okay, the Fed, the people are trying to defend this market and hold it up, so I'm just gonna not completely ignore it, but yeah.
David?
Yes, sir.
I just wanted to mention something, and I only use Hero back in the early days.
You
when it
did,
was
I remember.
back in the Stone Age, and just as a very simple concept, it's a prioritization of inputs. The way I think, I'm just saying, is a kind of a priorities. So when we isolate one item, and why would that be more material over the current condition of the market versus some line that's sitting out somewhere, which which is random in and of itself anyway? I'm just want to throw that in because I understand we all can get fixated on one element. And what is that? The forest for the trees type of concept. So for myself, I don't use those things. It doesn't mean anything doesn't have value. It is that when do you know, when is there value in it? What is the condition of the market that makes that a valuable asset to you? And when is it the context of the market, which today was south of the border and wear a helmet, just about all day, other than some squeezes. When we focus on a level somewhere, and all of a sudden we get fixated, that's it. I mean, for me, I'm talking about my experience. I never have to talk about anybody else. I'll just talk about me. Been there, done that. So I'm a minimalist. Doesn't mean you can't use tools, but they don't always fit, you know.
They don't. No.
Yeah. So that's all I wanted to add on that.
Yeah, no,
you're doing a lovely job, by the way.
Okay, buddy. So I'm trying to sort of like contradict myself in all different sort of ways, but like today's that example where I was spending less reliance apart from into the London close on this because I was just adamant that and people see me type this. You know, the Fed, the central banks are doing everything they can to support this market, and when they're playing around, in my own opinion, more in the market than they normally do, then the tools can be less effective. But as John was showing earlier on from the morning trade, so it's not the spiders, it's the S&P 500, which you can see in the screenshot in my watch list, a bit lower down. That can be, dare I say, Tom, more reliable in non-cash hours. But again, someone can show some data it's not. But what I also do here, as we all do, or some of us do, is that having looked at what's happening on the options on spiders, you can see on my watch list, it's just the fangs, yeah? So I would then be looking at NVIDIA. I'll then be flicking across at Microsoft, that's had a lot of love. It obviously won't show up if Bruce clicks on that now. And I'll be looking at Tesla and seeing what's happening there. I mean, Tom, when you and I used to trade, I'm going to say, 5-6 years ago together, and I'd be looking at NQ, and NQ was sort of, back then, NQ was in some ways, my options world. It was another lens, and I know you used to laugh. Rightly, just less is more, David. And you're right, it can be, because ultimately, things are so well linked, old word of electronically. If it's happening on here, then surely it's going to be happening on, on the ES, David. I'll say yes, but then as we were talking about a moment ago in that London close on this chart here from 11:30 through to 12, there was certainly a massive push to try and bring up S&P. And it moved a little bit, but not enough. And there was some money to be made there. That's probably not a good answer, Tom, is it really? It's a ramble from me,
Well, it's a little early. Is it wine time yet over there, David?
I've got a Duvel. I've got a beer. Oh,
okay. Well, I'm glad to see you're consistent. It's one of those things, in trading, you got to be consistent. Right?
Tom knows my habits, as you can all tell.
It's like Bruce was saying. I mean, this chart is a mess. You really can't get much out of this. And the other thing to consider is that not every move is based on an influence from the options market.
Right.
So it's when they line up, and the key word for me is confluence. Yeah. When I can put together and build a case of confluence from the options market to the the order flow analysis from Bookmap, it's a powerful combination when they line up. But you are going to have these times where it's a mess. It's not influential. And you are looking at the SPY here, like you said, as opposed to the 500 and to the equities, which is basically the Mag 7.
And I prefer the spiders more than the S&P 500. I think you use more of that, and I use this on a 15-minute lens. I know it doesn't make a mass difference. We all, Bruce, we have our little nuances of how we use it. A segue here, Bruce, is as I put in the chat, and we've said many times before, we do need to have a separate Webby with John, dare I say, Jack, Brent, maybe Matt, or one of those guys and girls, and we can, chew this all day long.
Yeah, absolutely. There's a handful of you guys, and it's such a powerful combo. I mean, just look at the way John is very clearly documenting this, and it's so powerful. It's like, well, I will only take it. I start to see this. I kind of understand some of these spot gamma charts, and then I see the order flow, and it's like, okay, like it's worth a shot here. So that makes really, really good sense. Just a question. So is the white line the delta between the two?
White line is the price.
Oh, this is the price. Okay, this is the price. Got you. Okay.
But hammering that point home, Bruce, at 3:00 when you can see the calls and the puts all going north. Typically, everyone's laughing. Yeah, the breaks only work when you want to work, David. Typically, then spiders would be up there. You'd have that rally finish. We back up to sort of a similar level to the open, and it's happy days, and it's all alignment with confluence. Today, no, just no, not at all.
Yeah, I mean this doesn't make any, unless this is like
and it's 3 billion. It's a massive number. 3 billion is huge. You can see that below it. Sorry, Bruce. The 30-day range is, you can see, from minus 8.2 to 3 billion. So we're at the top of the 30-day range. So that is a massive net positive number, and the market's still heavily down.
So, I mean, are you guys looking for a big pop tomorrow?
I'm always looking for a pop. The market's styrofoam, as far as I'm concerned. I'm bent out of shape as the Sharkbalu is bent out of shape on the short. John, what do you think?
I don't think you can draw anything from this at the end of the day. I wouldn't. We'll see tomorrow. When it opens and get the S&P read, but I don't think you could come up with something from this.
No. And some of those big fangs got really hit hard today, didn't they? They got absolutely murdered.
Yeah,
that's the thing.
Yeah.
Are you bullish, Tom? What do you think?
I think eventually.
You hold it long enough, it'll always come back. Yeah,
that's right. Yeah, that's the concept of cost averaging in over 10 years. It's eventually, if you can survive. What do I think? I'll tell you what I think is, I know I don't know. And I also know it's going to be Friday, and that we're going to get short covering at some point, and there's going to be squeezes because the market's heavily out of balance and it's short. Other than that, I don't know anything. So it's, it doesn't, and even then I don't know. So the only thing I know is I don't know, and that served me well.
It certainly does. I'm going to say, I think most of the audience have probably been in and out of your room, but I would highly recommend getting into Tom's room. He is a lifelong professional trader, unlike me, who's a cowboy.
Well, I have my moments. But I'm much less a wild man than I used to be. I've definitely slowed it down and gone for larger rotations. It's all fractal. A lot of work to trade the shorter rotate. It's just an individual preference and response time, And today with the volatility, it got a little interesting. It got interesting.
Yes, it did. As you said, helmets galore.
Helmets for everybody. In fact, if you come to Trader Lab, we give you a T-shirt and a helmet.
Yeah. Yeah.
So how do you like that?
And
anyway, yeah, right. I'm going to say good evening, everybody. I trade ETH also in the morning, so I'm kind of drooling a little bit on my keyboard. I don't want to short it out. So
lovely seeing you, Tom. Lovely seeing you.
Yeah, it was nice to visit all of you. Everybody stay positive. Have a plan. That's all I can say. Yep. Only trade when you have an edge, and control your emotional state as best you can. That's it.
Great tips, John. Great tips. Thanks, Tom.
Yeah, be well, everybody. Thanks. Nice visiting. Thank you, Bruce.
Thanks, Tom.
Take care.
Okay, bye.
Bye-bye.
All right. Well, I was going to try to get somebody in here who is following Tom, and maybe he'd go over it. But DNT, we haven't covered you in quite a while, so come on down. And let's get going here. So I'm sorry, guys. Like some chit chat in here. Some kind of bigger issues, I guess, like about the market in general, and then also some of these issues on risk management with John and how he's handling it. So, I mean, this webinar is all about you guys and, going over your content and opening the mic for you. And that's the focus. Sorry for a little, distraction from that. But anyway, we'll jump right in and get going here. So D&T, welcome. Good to have you back.
That was fun. That was fun.
Always good catching up with Tom, that's for sure.
So,
well, no, I followed Tom for a couple years, I think, actually. So I got a lot from him. He teaches great fundamentals, and I can't really, I don't really go too much anymore, but it's just my personality can't really handle that much. There's a lot going on in there. And my personality can't handle it, so I kind of have to cool it and just kind of mind my own and try to focus on myself. It's just my personality.
Well, you've been making some great content here, D&T. So really, and also compliments you similar to John's clarity in his markups. Yeah, it's really clean, clear. And I can only imagine that helps with your trading. But why don't you walk us through what you saw here? There's the kind of V bottom and reversal here.
All right. Well, real quick on the spot gamma thing. That was, man. I agree with Bruce. Like a lot of what the spot gamma stuff is, a lot of it's hindsight, and I've asked for some, maybe if we can go over some stuff like in real time with it. And oh, man, it's hard because no one's really doing like real time narration or anything like that. And it's just tough, and I have a hard time gaining anything from spot gamma, and I've been there for a few months now, but it's cool. I mean, sometimes it helps, and it's sometimes it's clear and it helps. So like what Tom was saying, priority of inputs, if you were to put it on a scale, like what does spot gamma make up as a percentage for one person versus another? I've been using it for maybe like since like September, and I'd say it probably makes up about less than 25% of my trading. And for that price that you're paying for it, it just doesn't really seem, I don't know how to put it, but and most of the traders in the chat itself are actually using auction theory as well, like the open type, previous day's range, previous ETH, previous days info, ETH info, opening type, relative volume, and statistics like IB high, ETH low, etc. So a lot of those people are using auction theory, and so like if I were to guess, the majority of the people, a percentage. What's the percentage of each person probably varies, I'm sure, right? But that's just what I've found as far as prioritization.
We'll probably do it like we've kind of been talking about for a while, a separate event or events.
We have
maybe a week long event with that kind of stuff. And that should be really helpful. But let's jump into this chart here, D&T, and then
great points, D&T. Great points.
Yeah,
just because we talk about it so often, we almost talk about it every time. So I mean, I just want to put it out there that it's not like a holy grail.
That's fine.
It's prioritization of inputs, like Tom said, and I agree with what he was saying there. It makes up a certain percentage. Just like CVD, we were covering the delta of what Moby was saying, and that's a beautiful tool as well. Like like all these little tools, they all make up. And I did experimentation with Bookmap for a while as well, and I went through a lot of add-ons, and a lot of different things. And what I learned is it's really it's really tough to kind of take all these variables, all these like inputs that we have, and think that it's going to help us, or we're going to put it above this or that, and it's just really hard to get any statistics and stuff from that. But we don't really. But when we add all these inputs, it can make it very difficult. So like, the CBD thing it's really nice, right? But like if you're using it in every like location, it can mess you up. So like if you're using the CBD, that delta, you want to look at the CBD when it approaches a certain level that you're interested in. So like what Bruce just highlighted there, those sellers that are kind of stuck there on the bottom, that was a location of interest that I was looking at. And Q also tested this naked volume point of control here. And I mean, the market, I think, was going down. Oh, okay. Yeah, it was going down hard, right? But in my notes on the top, I have CVD is showing strength. And the ad, it's in market internal. It's only showing neutral. It's not even showing like negative or anything like that. So it's like market comes down, NQ's testing this naked volume point of control. Market does this like hard reversal, and I usually go with the trend. And that first short you see that I circled red, I actually was looking for continuation down. I got stopped, waited a minute. The market impulses up and then pulls back to this absorption zone that I was previously looking at, and then I get long. And then
Remind me what time zone you're on East Coast, aren't you?
it's Eastern. Yeah, I'm Mountain, but this is Eastern. Yeah.
Yeah. So that's London close. That's the thing. That 11:30 is London
There you
close.
go. Yeah, London close V reversal.
That's right. Yeah. The buggers. I was about to use the F word there. Frickin'. They frickin' run it down into London close, and off you go. And we've seen some. Apart from today, we've seen some phenomenal 180s, as I call it, reversal. Phenomenal 180s at a London close. Yeah.
Yeah,
Worth
that
noting.
that was a monster. Yeah, very.
Yeah.
Time of day has been really.
It is, isn't it?
Yeah. So segmenting. It's still hard to get stats from time of day. I mean, I could go back and try to get stats for it, as far as reversals go or whatever. But, you notice these trends and these things, but it does help for my mind to segment things into time of day. Like
Definitely.
I anticipate, like a good example actually is, do we have another image of mine on here?
Let's take a look.
The London close. That was beautiful. That one. That was lucky.
We've got a few different.
Click on the Bookmap.
This one.
Oh yeah. Okay. All right. Let's see. Okay, so this is that same trade. So if we look a little bit left, look at 11 a.m. Eastern. I don't know about you, David, but we talked about this last session that I was on. It was like a couple sessions ago, as far as time of day goes. And you weren't here, I don't think, but me and Bruce were talking about 11 a.m.
Sometimes 30 minutes
I look for, I look for a pullback.
Okay.
And if so the market's trending down, and around 11 or so, I'm looking for a pullback, but we can see at 10:30 it actually got the pullback. So, and then 11 o'clock it tries again, but look, didn't really get that pullback, did it? No. So that's just weakness. So I'm using this like I use this, and I have I call it the pre-London close pullback, which is 11 o'clock. Yeah, so pre-London close, which is 30 minutes before London close, I look for this pullback to hopefully engage in the trend. and it really didn't pull back. I was just strong
Yeah.
selling.
I mean, I'm sorry to cut across. You always do that, David. And I'm happy to be corrected in the chat or elsewhere. And there's a question there, Bruce, on footprint. Perhaps you can have a little look at from Zach while I ramble on. I think still, DNT, that there's other. You've got obviously the European bourses close at 4:30 at London time, 11:30 here. But then there's a gold fix, which is round about that 11 o'clock. And there's a currency fix round about that 11 o'clock. And those also, if you look at a dollar pound chart, if you had one of those running, you'll see that can go pretty damn effing crazy at that 11 o'clock versus the 4:30 because of those fixes going on. So that could be some of the explanation as to why you're getting a bit of a, what's going on at 11 o'clock, David? Yeah.
Okay, cool. Good to know.
Yeah.
So I get this
critical.
I get this anticipated behavior, 11 o'clock, pre-London close pullback.
Yeah.
Hopefully I can engage in the trend. It didn't do it. It didn't come back to my location of interest, which was that pink rectangle there. It really didn't come up. It was so strong. I wasn't able to get a short this day, actually. Okay. I wasn't able to enter. So that was a huge move down, and I
you need a short.
Yeah,
you guys need your shorts. Come on,
Oh man, that's funny. All right. So that time of day has really helped out to get these anticipated behaviors.
And
if it doesn't, it's like one of those things where if this, then that. If not, then what? Right? If it happens. If the market gets that pre-London close pullback, I'm looking for a short, and I think a lot of other people are looking for the short in this general area. But if not,
I was going to say that. Yeah, I was going to say that it's a bit like if I diss on things like Fibonacci, and Bruce can slap me around on that. These things that become self-fulfilling. You're saying people think London close right, so you've got a lot of traders looking for the market to turn on a dime, etc., etc. So yeah, it can be fuel for itself. That's for sure.
I don't know. I mean, I'm seeing some really nice stuff in here. You outlined the delta, but like, here you got some trend lines, but that's not the big thing. Look at all this liquidity. And it's getting filled. It's just getting filled. It's getting filled. You got your London close here, and then here's your capitulation into it. And now this is like Shark earlier. You're looking for, now buyers are getting filled. Okay, these are buyers here. And like how much more selling pressure is there? So now we're looking to see when aggressive buyers start to come back in. And you got a break of structure in here, and you just got a couple of different things to look at for a really powerful move. Or it can be, these can be really powerful, because the market just keeps going, and then the rebound and the move away is going to be pretty quick. If you're looking at a head and shoulders, like, shoulder, head, shoulder. I mean, this shoulder way over here is so skewed to the upside because it's a slight pullback, because you got so much buy volume coming in. So you nailed it here. I mean, I think you can just put those couple of things together, and you got something real powerful. DNT, I love the way you're using this tool. And really honing in on and editing down your checklist, as John had said earlier, how that's really kind of saved him or helped him, especially in these more volatile times.
And if anybody's here listening and wants to use that, feel free to use that checklist. This is a checklist that I think can cater to a lot of people that use Bookmap, it's I don't know how to put it. It's nice to have. I mean, um, if I actually waited for number 2 right there is the pullback to absorption zone, and picks the stops, and that you can change that absorption zone to anything you want, like your location of interest, like pull back to your location of interest. And if you notice that it picks stops and then it moves in the direction, like that second long entry, it picks that zone on the way down, and then that's boom, it just shoots off right there. Like that's. But if anybody wants to use the checklist, they can, take that modified if they want. I've been trying to figure that thing out for a long time, and it took a long time to kind of get something figured out there.
Yeah, I mean, that's your trading plan. This is your edge. It should take, it takes time. And you put it together, and you feel free to share. It's just it's a TXT file. Or I'm sorry, no,
Hmm.
separated column,
Hmm.
comma separated file. So you can just very easily share these in the Bookmap Academy room.
Hmm. Okay.
Yeah. So
Yeah, if anyone's interested, let me know.
yeah, I mean these checklists are fantastic, and I know that you've been working on this. And anyway, some simple things: back test study, and I think you can put together some really kind of simple things to at least go deeper into, and then start to see, like, okay, well, does this repeat? Do I understand it? Is this something that I like? Does it kind of naturally do I naturally gravitate toward it? And is it something I like? Shark, for example, he's been trading that 1 2 3 pattern for a long time. So he likes it. It resonates with him, and then just become a total expert in it.
Hmm. Yeah,
So
Hey, what's
that'd
this?
be
Was this Tuesday? Sorry, guys.
go out, go to the other picture.
this one,
Should say
24th,
it there too.
25th.
Yeah, right down the bottom. The 25th.
Uh,
Yeah, Tuesday.
Tuesday. Okay.
So that's showing the CBD chart right there. The
Yeah.
second sub chart right there. It's
this one.
CBD. Yeah,
Okay.
pretty positive there. Even though market was just crashing.
And that's a funny one. Yeah. Anyway, there's some. I mean, these days, like today too. Like, I mean, with this volatility starting to come in, like, I mean, you just see things that you typically don't see that often. I mean, these big walls, and they trade. And it keeps going. But it's the same old stuff. It's just more. And The swings are kind of. I find the swings a little challenging. Like
Oh,
you'll
they
get
are
these bigger
challenging.
bigger swings, and kind of harder to um, uh, judge those when you're looking for a pullback or something, like maybe up here, and you just don't get it. It just keeps going. That's just the
Yeah, like
environment.
today was a great example of that. I think near the end of the day, near like the middle lunch hour to like final hour or final
Mhm.
hour today, especially, it was a really tight compression and then just releases. So it's like hard to get like risk off before that release. So it's like I think I was talking to a friend and he was saying that he was bailing out of his trades and then it goes in the right direction. It's like the
Oh,
market is in like a balance, and then within that balance the rotations are really compressed, so it's hard to get that risk off
big time.
before the release. Yeah, it's a tough market, and I
Yeah.
like John talking about that risk management. It's pretty helpful to hear that,
Yeah.
Yeah.
and it's true because um, we're not here to gamble. We're not here to play around.
Yeah.
We don't want to waste time. It's funny. Before I had my baby, I didn't realize how much time I wasted just playing around and messing around and playing a game, having fun. uh, we're not here for that. I
No.
mean,
No.
no,
Sadly, no.
Yeah.
yeah, so I, I mean, we want to we need to make our time worth it.
Yeah, yeah. I mean, this is it. I mean, you're doing it with your checklist and your markups, and
I'm trying,
you
yeah.
know, um, and also, like you were talking about the complexity. Well, like Trading is Life has been doing great, and very, very simple strategies that he's looking at. In fact, you can, even look at what some of the things that John is covering. These are really simple things, and it's really just a few. Now, then these, John's got more nuanced in, some other elements in there, but those are kind of confluences or different things. But like, you know, um, just go with the example today of like looking at Hero, starting to understand it, but then now what's the order flow say? And now he's got something, and he sees a sweep up into it, meaning like it's a book sweep, it's a stop run, it's hitting liquidity, whatever it might be, and then it's failing. Now it's worth a shot, and he's and he's nailing it. So and that comes through the setups checklist and the back testing.
hmm Um, so the risk management thing. Today is another good example of that. Since we're talking about it,
Mhm.
and John clearly said that he was hoping to get in the morning, like before the market opened. Like just because it's so difficult to trade the RTH sometimes. This is, I think, like important parts of risk management that like isn't really taught because it's so kind of, I don't know if it's difficult to understand, but it's not really taught enough. How do we gauge like how much, like, should we be entering in this market? Okay, so let's say for instance today was what, GDP. We're anticipating, we weren't sure like what was going to happen and like what kind of market or what kind of participants would be in the market today, based on our open, which was just in yesterday's range. We had a two-sided overnight range. It was a wide range, but we had a lot of volume, wide range. I mean, we had GDP. So like, there's these things we kind of can gauge what kind of um, participants, and like, it was hard for me to figure out today, like how wide should my stop be, you know, stuff like that. So like these like little details, they do make a difference.
They do. They do.
My stop was only like 11 ticks today, and I got knocked out. And I'm like, shoot, I'm gonna have to widen this
Mhm.
out. But if my risk is wide, you really need to kind of be a little. You need to be different on your entries as well. So everything kind of changes. And if it doesn't fit, like what John was saying, then you kind of just sit it. You have to sit it out.
Yeah, yeah, exactly. Or or like he is studying or finding other solutions. So he's trading
Mm,
trading the ETH.
The oil as
He's,
well.
he's looking at oil.
mm-hmm,
Yeah.
mm-hmm.
So playing around with different things, and you always read and hear about these professional traders, or they
Dot.
become experts in their kind of go-to strategy, and then after a few years it doesn't work. Then what
Scott
do you
would
Mm,
talk that, wouldn't he? Yeah.
do?
mhm.
Yeah, someone like Scott Pulsini, my God, a highly skilled order flow dome trader, and then he's eaten alive by HFTs. So it killed the business for him. So it's destined to happen. I imagine. Anyway,
If there's a thread there to pull, sorry, Bruce, and I think if that was a question, DNT, or a statement in terms of we're always focusing about getting in, getting out, that broad stuff, where the setups are, what we're seeing on the charts, but less so in terms of that risk management. And it's great hearing John talk about that time and time again, how he is approaching the market, how he's Tom in his helmet, that sort of thing. And maybe, Bruce, we can think about that as we move forward this year, perhaps having a little bit more, whilst bringing everyone along, so we're not jumping into some convoluted way of trade management.
Yeah. I mean, sounds good. Great direction.
Well done,
David.
DNT. Yeah.
Guys, let's wrap it up here. I mean, it's like we've been going 2 hours, and
talking about golf again. That's the trouble.
Yeah, I'm sorry we got sidetracked on some different kind of topics and discussions, guys, and didn't get to some of your content. But we'll take a. We still got you, and we'll look into it. Next week. So welcome everybody. And Donne, I've heard a lot about you, so I don't know if you've been filling out your spreadsheet or interested in partaking. Be great to bring you into the mix here. Thank you all. David, take us out.
Thank you, Bruce. Been a great catch-up, traders. Lovely seeing everyone again today. Stay safe. Keep those helmets on, as Tom would say. Have a lovely weekend when it comes, and I look forward to catching up again next week. All being well.
Thank you, David. All right.
Cheers, guys. Thanks a lot. Take care. Bye-bye.